How to trade Netflix stock before and after Q3 earnings. When Netflix Incorporated releases its third-quarter financial results on Tuesday after the market closes, it will serve as the first major tech earnings announcement. The severely battered stock surged during the morning trading session but dropped along with the overall markets in the lead-up to the event to trade marginally lower. The stock was trading sideways when the streaming giant released its second-quarter results on July 19, but the announcement of the numbers caused Netflix to break bullishly into an uptrend. Netflix announced earnings per share for the second quarter of $3.20, exceeding the street expectation of $2.96. The company's $7.97 billion in reported revenue fell short of the $8.04 billion average expectation. Despite the fact that Netflix's revenue fell short of expectations, the stock rose in the days that followed because, according to the company's guidance, it lost 970,000 customers during the quarter rather than the 2 million it had predicted it would lose. Traders and investors will be keeping a close eye on Netflix to see if it has been successful in increasing both its user base and customer retention. Technically speaking, the stock of Netflix appears neutral going into the event and will need to take direction from Tuesday's after-market candle. Because stocks can react bullishly to an earnings miss and bearishly to an earnings beat, it should be highlighted that holding stocks or options over an earnings print is equivalent to gambling. Because the institutions writing the options raise the premiums to reflect expected volatility, option traders, especially those holding close-dated calls or puts, assume additional risk. The Netflix chart shows that since August 15, Netflix has traded mainly in a sideways fashion between $211 and $250. On October 13, Netflix changed direction and entered an uptrend within the horizontal pattern. Since then, the 4-hour chart has shown a string of higher highs and higher lows. On the daily chart, Netflix hasn't yet printed a higher low above $211 to signal the start of an uptrend. If Netflix drops after the earnings report, bullish traders will like to see the stock rise off that level, while negative traders will want to see the area lost because losing it would negate the potential upswing and put the company into a downtrend, which is more likely. There's a chance, when Netflix's stock surged up to $250 on Monday and rejected the price as resistance, it produced a bearish double top pattern. On September 20, Netflix also rejected the region. Strong traders will want to see the stock surge sharply into the upper gap, which is located between approximately $248 and $333, if Netflix receives a bullish reaction to the earnings print. If the stock rises, bearish traders might keep an eye out for Netflix to reject the 200-day simple moving average as resistance. Netflix has support below at $227.68 and $212.98 and resistance above at $265.80 and $294.75.